Most people believe passive income is something you build after you already have money. First, you get rich, then you invest, then the passive income arrives. But that is exactly backwards. Passive income is not the reward at the end of the journey. It is the vehicle you use to get there. And the earlier you understand the 5 types of assets that can generate it, the earlier your money starts working instead of waiting. Before we go through each one, let us be precise about what passive income actually is. Passive income is income that does not require your active time to generate it. Once the asset is built or bought, it earns whether you are present or not. You sleep, it earns. You take a week off, it earns. You get sick, it earns. A salary stops the moment you stop showing up. Passive income does not. That is the fundamental difference. And it is the difference between spending your entire life trading hours for money and eventually owning something that does the earning for you. Income Stream 1. Index funds and ETFs. This is the foundation that most people skip because it sounds boring. An index fund is a basket of hundreds or thousands of companies bundled into a single investment. When you buy one share of a global index ETF, you own a tiny piece of thousands of businesses across dozens of countries. You are not betting on one company succeeding. You are betting on the global economy continuing to grow over long periods of time. Historically, a diversified global index has returned around 7 to 10% annually over decades. That means money invested at a reasonable rate doubles roughly every 7 to 10 years, without you doing anything, without you checking a screen, without you understanding every company in the basket. You contribute consistently, reinvest the returns, and wait. The boring part is the entire strategy. The discipline is the work. Income Stream 2. Dividend Stocks. Some companies distribute a portion of their profits directly to shareholders every quarter as cash. These are dividend-paying stocks. If you own shares in a company that pays a 3% annual dividend, every $1,000 invested returns $30 per year in cash. That number sounds small. Until you have $50,000 invested, returning $1,500 a year in dividends without selling a single share. And if you reinvest those dividends automatically, you accumulate more shares, which generate more dividends, which buy more shares. The compounding accelerates slowly at first, then noticeably, then dramatically. Dividend income is one of the most underrated mechanisms in personal finance. It rewards patience with cash consistently, regardless of what the stock price does on any given day. Income Stream 3. REITs, a real estate investment trust, allows you to own a share of income-producing real estate without being a landlord. We are talking about shopping centers, logistics warehouses, hospitals, student housing, office buildings, data centers. These trusts are required by law in most countries to distribute at least 90% of their taxable income to shareholders, which means they pay high, consistent yields. The average REIT dividend sits between 3 and 6% annually. You receive the income generated by real estate. You skip the tenants, the maintenance calls, the repairs, and the enormous upfront mortgage. You can start with less than the price of a dinner. That is the deal. REITs offer real estate income without the real estate problems. Income Stream 4. Bonds and fixed income. A bond is a loan you make to a government or corporation. In return, they pay you a fixed interest rate for a defined period. A government bond paying 4% annually on $10,000 returns $400 a year in completely predictable income. Bonds do not grow dramatically. That is the entire point. They are the stabilizing layer in a passive income portfolio. They pay steady, low-risk income while your growth assets fluctuate. In a well-structured portfolio, bonds provide a reliable floor while equities reach for the ceiling. New investors often ignore bonds because the returns feel small. Experienced investors use them because the reliability is the value. Income Stream 5. digital products and skills. This is the one stream that requires no starting capital, only starting effort. A PDF guide, a short online course, a template, a digital tool, a self-published book, something you create once, then sell or distribute an unlimited number of times. One sale does not reduce the product. The file exists forever. Every additional sale costs you nothing. The income from a well-positioned digital product is as passive as it gets. The upfront work is real and significant. But once it exists and is findable, it earns without your presence. This stream is available to anyone, regardless of their current savings, because the currency it requires is knowledge and time, not capital. You do not need all 5 of these streams. Most successful investors start with one, build it consistently over several years, then layer in a second. The key is to begin. Even $50 a month going into a global index fund starts the process. The gap between your current position and a functioning passive income portfolio is not the size of the obstacle you imagine. It is one decision repeated consistently. Assets compound, habits compound. Patience is the one skill involved that cannot be bought, outsourced, or shortcut. Salary pays you for your time. Passive income pays you for what you own. Begin moving money from one side to the other and let it run.